Every day, trillions of dollars move around the world. Not in trucks, not in suitcases, but quietly, through screens. This is the currency market, and it decides how expensive your life is without you ever noticing. Let's break it down. Imagine the world is one giant marketplace. Every country brings its own money to trade. The dollar, the euro, the yen, the pound. Currency markets are where all this money gets exchanged. When you travel and swap dollars for yen, that price you see, that comes from the currency market. But here's the part most people miss. Currencies don't have fixed prices. They move every second, based on belief. Belief in a country's economy, belief in its government, belief in its future. That's it. So how does it work? Currencies are always traded in pairs. Dollar versus yen, euro versus dollar, pound versus euro. You're never just buying one currency. You're betting that one is stronger than the other. If the US economy looks strong, people want dollars. More demand means the dollar rises. If confidence drops, the dollar falls. Simple supply and demand. Now let's talk about who moves these markets. First, banks. Huge banks trade currencies non-stop for clients, businesses, and governments. Second, corporations. If Apple sells iPhones in Europe, it earns euros, but it pays workers in dollars. So it has to exchange currencies at massive scale. Third, governments and central banks. And this is where things get serious. Central banks control interest rates. Interest rates are like gravity for money. Higher rates pull money in, lower rates push money out. If Japan keeps rates low and the US raises rates, money flows toward the dollar, and the yen weakens. That's why central bank announcements can move markets instantly, sometimes violently. Now here's the wild part. Most currency trading isn't about travel or business, it's about speculation. Traders are constantly asking one question: what will the world look like next? Will inflation rise? Will growth slow down? Will war break out? Will a government collapse? Currencies react before the news feels real. That's why currency markets often move first, before stocks, before crypto, before headlines. They're forward-looking, and they never sleep. The Forex market runs 24 hours a day, from Asia to Europe to the US. No opening bell, no closing bell, just non-stop judgment on the global economy. And here's why this matters to you. When your currency weakens, imports get more expensive, fuel costs rise, food prices climb, inflation creeps in. When your currency strengthens, imports get cheaper, travel costs drop, purchasing power increases. So even if you never trade currencies, they trade you. They shape what you pay, what you earn, and how far your money goes. Currency markets aren't about charts or jargon. They're about trust. Trust in nations, trust in systems, trust in the future. And every second, the world is voting. With money. If you like stories that explain how money really moves the world, hit subscribe. And check out the playlist, because the biggest financial forces are usually the quietest ones.